What is investing and why you should start investing in the stock market? In this video, I'm going to share with you the basics of investing and what you should pay attention for before you get started and before you buy any stock or ETF. When you invest, you tap the power of compound interest. Compounding can transform your savings into huge returns over time. The earlier you start investing, the more you can gain from the magic of the compound interest. As you can see, the time horizon is essential in investing. Investor is someone who is holding the stocks and positions between 1 to 5 years at least. Of course, there are more strategies where you can make money with day trading or swing trading, but in this particular case, we are focusing on investing. I suggest you, if you are new to this area, don't jump into risky strategies like day trading because you can lose a lot of money and it would happen very fast, so you would not be able even to realize it. Before you are able to purchase any stock or ETF, which I'm going to explain in this video later, you should first check out what brokerage accounts are out there and choose the right one for you. There are different brokerages out there, and based on your location and risk tolerance, you should Google a little bit to see which one fits your best needs and choose the best one. Also, pay attention to the fees and to the type of accounts which each broker offers. There are different types of accounts, like for example, margin account or cash account, and like I said, depending on your needs and strategies, you should decide which one is the best for you. Let's clarify now what is a stock and what is the difference to an ETF and what is the best one and easier one for you to start. Stocks or equities are shares of a company which you buy low and sell higher in best case scenario. Let's take a look at Facebook as an example. Facebook went public in 2012 and you could have bought 100 shares for $38 each. 8 years later, the price was around $204. This means you could have made $16,600 gain without the fees. That's a little bit more holding than 5 years, but that's just an example how you can make money of a stock if it goes up and if you bought it lower. Instead of investing in particular stocks, you can invest in a basket of stocks which is called ETFs or mutual funds. Let's take a look what is an ETF and a mutual fund. Mutual funds and ETFs are similar. They are both basket of stocks or funds. Some focus on certain sectors, while others focus on the whole indexes, for example. Dow Jones, for example, represents 30 stocks, S&P 500 represents 500 stocks in the US, and Nasdaq represents the tech sector. There are also international ETFs out there, like DAX, for example, which represents the German index, and Eurostoxx, for example, which represents the Euro index. As you can see here, guys, this is basically the 10-year weekly chart of the S&P 500. This chart basically represents the 500 companies in the US. As you can see here, based on the chart, we are in a strong uptrend with some pullbacks here and there which could have been used for building positions around those levels. This here is basically the QQQ ETF, which represents all the stocks from the tech sector. As you can see, this is a very strong and very bullish chart. This one represents also the weekly chart of the past 10 years. We have very small pullbacks, and those pullbacks could have been used building position in some tech names or even buying the ETF as a whole, because this represents tech sector as well. This chart here represents basically the Dow Jones index and the 30 US companies of that index. As you can see here, we have as well a very strong chart, which is not as strong as the ETF QQQs, which represented the tech sector, but still, if you have invested in this index on pullbacks especially, you would have made some money. And as you can see here, the coronavirus gave us some opportunities to start building positions around those levels here. If you want to see some more information about the stocks which are included in the S&P 500 index, for example, you can just visit the webpage market.businessinsider.com. As you can see here, we have different tabs and you can use that information for your decision. For example, let's say you want to see which companies are in the Dow Jones index. You click on the tab Dow Jones, and if you click on all, you would see all the companies which are included in that index and you can make based on that your decision if you want to invest in the Dow Jones ETF or in some other index. Like I said, on the S&P 500 you would be able to see the 500 companies which are included in that ETF, and instead of buying the different stocks, you can just start investing in those ETFs as a whole. In the tab Nasdaq 100, you can see which are the 100 stocks which are included in the tech index. For example, Adobe, Alphabet, Amazon, AMD, Apple, Autodesk. Those are all very strong stocks, and there have been very strong stocks in the past. And instead of trying to catch one particular stock and trying to find out the fundamentals of that stock, which is even riskier, I would suggest you, especially if you're a beginner, it would be probably much easier for you just to pick one of those index ETFs and invest in that. Like I showed you in the previous example, especially the tech sector has been very hot in the past years, and I don't think that that's the end. I think that's going to continue. So take a look at the companies. If you're interested for more in-depth information, you can as well take a look into the fundamentals of some of these companies to see what you are investing in. And as I mentioned in my video, you can also invest in some other indexes, some foreign indexes. For example, Eurostoxx represents the Euro index, and this is basically the ETF for that. And you can see which are the companies included in that Euro index. For example, that's something like BMW, Daimler, Deutsche Post, Deutsche Telekom, and so on. The DAX represents basically the index for all German companies which are included in. For example, here is Adidas, Allianz, BASF, and so on. If you are interested to take a look at some of those companies or invest in foreign indexes, you can of course choose to go with that. As for beginner, and if you are in the US, I would suggest you to start with some of those standard ETF indexes like Nasdaq or S&P 500 and just take a deep dive into some of those indexes. The positive aspect of investing in ETFs is that if one company goes down or goes to zero, that may not affect your whole investment. The negative aspect, on the other hand, is that you won't be able to catch huge moves like DoQ or Apple, for example, on those particular stocks. ETFs on mutual funds are designed for diversification. They are less risky than individual stocks because your investment is spread through different stocks and bonds. Every investment strategy falls somewhere between low risk, low return and high risk, high return. The reason why not everyone is jumping into the stock market is unfortunately because there are no low risk, high return strategies out there. Those who chase the high returns invest heavily into stocks. Before you jump into any stock, make sure you make a little bit of research. What is the company doing? How are the finances? And what is the current situation in the whole market? For that, you can start with the free website Yahoo Finance. Let me show real quick. And of course, if you want some more in-depth information and an overview of the past gainers, you can always visit the website finviz.com. It's very useful and free website which you can use for your analysis. For example, if you choose the tab Maps, you can see how is the performance of the current market and the current sectors. You can choose one-day performance, and then you would be able to see how are the different sectors performing. Or you can choose 1 week or 1 month or 6 month performance, so you would be able to see which sectors are performing strong. Like for example, like we were talking and discussed already, the tech sector is very strong. As we can see here, Apple and Microsoft, they had huge gains recently and they're the leading sectors in the industry. Of course, you can use that website not only to check the current market situation and sector situation, but you can also use that website to screen for some stocks, for example. If you go to Screener, you would see here that basically you have a lot of filters and you can choose something what you would like to see for stocks, for example. You can see here top gainers, top losers, new high, new lows, most volatile, upgrades or downgrades from analysts, support and resistance, major news, and so on. Let's say you choose top gainers and you would be able to see the top gainers which have made the most moves recently. Of course, you can play around here and you can choose sector like for example technology, or you can choose some kind of index like for example S&P 500 or Dow Jones. You can play with those filters, and based on the strategy which you are using, you can decide which is the best stock to buy and make a little bit of research based on what you're seeing here. If you click on TA, you would be basically able to see the charts here and also some information about the volatility, short float, market cap, and so on. Another very useful website, and which is free and used by a lot of people, is Yahoo Finance. As you can see here, you have also some screeners right here, and you can see solid large growth funds, for example. You can search here for different funds, or you can just basically type in the stock you want to research, like for example, let's say BYND, which is the Beyond Meat stock, and you would be able to see here basically a summary of the stock. The open price, the previous close, the volume, the average volume, and so on. If you click here on financials, you would be able to see the income statement of the company, the operating income or loss, the net income, and you would be able to make a better decision based on that information right here. Of course, you can also check the holders, who is holding that company, what are the top institutional holders of the company, and based on that you can also make your decision if you want to be invested in that particular stock. If you don't have any chart software, like I said before, you can use either Finviz or you can use even Yahoo Finance here and just check the current chart, and you can switch here, for example, to candle chart and see the chart. If you're interested to see some more examples of my technical analysis, you can check my website sylviabellrock.com, where I'm explaining how I'm searching for my stocks and how I'm doing my entries. And last but not least, focus on the bigger picture. Of course, the stocks go up and down, and you shouldn't be freaked out if the stock starts to go against you. You should always pay attention that the market goes up in general. Even if you have some swings to the downside, you have to stay patient and see how the stock would develop in a couple of months or even years. So thanks for watching, guys. If you like this video and if you want to reach high returns, make sure you subscribe to my channel and hit the like button.